Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks again for having me.
Gold, is it reacting like you expected?
Pretty much. Gold, we had a little short-term low in mid-August and had a little bit of a bounce out of that. And, I think that bounce has probably run its course. Gold has turned down out of that bounce. Silver, the bounce has already failed, and then some. Silver, I don't know if people realize it, but not only has the August low been violated, but silver is now at a 31-month low. It's knocking on the door of its previous 9-year cycle low. We talked about the dangers of the 9-year cycle top, and I said that would be the worst case scenario for metals, and that has absolutely proven to be correct. You look at the metal stocks, pretty much the same story. They're sitting just above, well, they're a little bit further above, but they are approaching their previous 9-year cycle lows as well. So, the metals complex has been hit hard, and that's pretty much in alignment with the setup with the 9-year cycle top. I think that is occurring in conjunction with the overall peaking of commodities. This thing is, it's like a battleship turning. I think this is a monumental shift in asset classes. We look at crude oil. It's been a little bit more of a holdout, but I think that we, the counter trend bounce that we've seen, also out of an August low, I think it's probably run its course. And if so, we should see the higher degree cycles take hold there, which should peak out crude oil. And the general commodity complex as a whole, is the 3-year cycle, I think is peaking in harmony with metals. As, like we said the first year, the dollar has been bottoming. And, that's part of that monumental shift, the bottoming of the dollar and the peaking of other asset classes with, metals leading it.
When you're taking a look at this chart, where should people expect it to go now?
Man, that's always a hard question. I don't like anything, but, honestly, cash is the safest place. I may have made this comment before on an interview with you, but, I had an old time investor one time tell me, he said, a pretty savvy guy, he said, people think there's only 2 positions in the market, a long and short. And he said, there's a third, and that's aggressively on the side. And, when I look at what is trying to set up here, I know we've been talking about this forever, but like I said, it's a monumental shift. It's been like turning a battleship, and slowly we're seeing this stuff fall in place. And like I said, commodities, it's there. With equities, we're not, it's not become obvious yet. It's not going to become obvious, I'm afraid, until it begins to be too late. Equities have by and large been a holdout. I get it. I understand. But it doesn't change the fact that it is the bubble that it is. It doesn't change the fact that we're seeing this shift, if you will, with everything turning. And with equities, what we are seeing is there are cracks in the foundation in other indexes and averages and sectors. I mean, if you look at automotive, it looks horrible. The structure there is just not good. If you look at housing, to a little bit lesser degree. But if you look at banking, if you look at some of the foreign indexes, you look at the Hang Seng, the emerging markets period. If you look at, let me think of another one. I'm drawing a blank. The FTSE, to a lesser degree, the CAC and the DAX. There's evidence there that the shift is trying to take hold in the equity markets. It just hasn't materialized yet in the mainstream U.S. equity markets. And I think that in a nutshell, that has provided camouflage, and nobody really sees or understands what is trying to take place here. And I'm afraid that by the time they do, that, like I said, we wake up one morning and something has drastically changed.
In other words, the warning signs are there from all these other markets, and you should be paying attention to them. Do you pay attention to them?
Absolutely, I pay attention to them. The last couple of years, it was the blow up into the bubble. It tried to peak. If we digress just a little bit, the problem is that, it's kind of like the person that cries, wolf or fire in the theater or whatever. Myself, many other technicians, have seen this for what it was or what it is. And we saw it in 2015. It tried to crack as it rolled over into the 2016 4-year cycle low. And, that ended up being one of the more modest declines into a 4-year cycle low in history. And then from there, it blew up again. That's those two events are mutually exclusive. It doesn't, the fact that it continued does not negate the fact that it is what it is. It's just, it has gone on far longer than anybody could have imagined. And I don't, there's nobody, there's nothing historically to compare to. So, I don't care who says they saw that nobody has imagined that this could have materialized in the light that it has. I mean, it's just not reasonable to have ever assumed such a thing. And, like I said, the fact that it has gone on so long, and the fact that people like myself and others that I'm sure are guests on your show that see it for what it is have warned about it, has been somewhat discrediting, I guess you would say, because, who believes it at this point? Because, they've been hearing this for a couple of years. Oh, it's a bubble, it's a bubble, it's a bubble, nothing's happened. But what I'm saying is that before, in 2015, 16, we just kept seeing everything blow up, blow up, blow up, blow up. Now, we actually have some cracks in the foundation. We have seen the turn in commodities. We have seen or the turning in commodities. In some, the metals, like I said, they're obviously leading, which we talked about. The bottoming of the dollar, which we talked about. I think in January, I've mentioned this a couple times, but it's a good point. And the point is that it shows that we have, we saw this coming. I think in sometime in January, I think you asked me what was going to be one of the surprises in 2018. I said the strengthening of the dollar. And that's exactly what we have seen. I think this whole thing is centered around that. And so slowly now things are falling into place, and we do see the cracks in some of the foreign markets and some of the domestic indexes and averages, but nothing has quite materialized yet. And, maybe it takes a little while longer, and maybe it falls into place real quick. But at this point, it's kind of like walking through a minefield. We have evidence. So it's trying to take place.
We'll have more with Tim Cyclesman Wood right after the break.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, of course, the question is, when will this break occur?
Well, it all boils down to structure, and it's. I don't mean to this to sound like an avoidance of the question. We will see, and that's what I cover in the research that I put out every month, and then short-term updates 3 nights a week. We will see the structure when it falls in place. And like I said, some of the stuff's there, but as it materializes, it's like throwing. Think of the balance beams with the, scales, like the scales of justice. You put it on one side and you weigh it with the evidence against, the evidence on the other side, and you start to build the case. And so those details is you get that evidence as you get it. The market will give it to us in all in due time. So that's an ongoing process that we're watching. The thing is that the process, I believe, is underway, and I guess in summarizing the point is that part of that process has been the bottoming of the dollar, which we've seen, the topping of commodities, which we are seeing, and the rolling over of metals, which we are seeing, and which is part of the overall process. So it is underway, and the thing that I fear, I didn't understand the profoundness, who could have, of the statement that I made coming out of the 2009 low. I said something to the effect that, the longer this goes on, the more dangerous it would become. Now, when that happened, or when I made that comment, I did not think. I knew it was a 4-year cycle low. I knew we were in for a heck of a rally, but I did not dream that it would be a reflation of the bubble that, well, I say that. I guess the bubble really did kind of crack in 2008 and 9, but the reinflation of that bubble, for lack of better words, I didn't dream that could have occurred. And so the thing that I see is that people are so complacent here. They don't understand the environment we operate in, and because of that, I think that this has gone on so long that people don't understand, like I said, the consequences of what we face once this, everything does set up in jail and the whole thing, the battleship gets turned, if you will. There's going to be exposure that people don't even think they have exposure to the market. But if this is bigger picture, what I'm thinking it is, trust me, everybody will have exposure.
We'll have more with Tim Cyclesman Wood right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, so often people say contagion. We have markets in Argentina and Turkey in serious trouble. Are they the canaries in the coal mine?
I think so. I think that's part of the leaders, if you will. Just like, if you look at, any of the emerging markets, specifically Hang Seng, Shanghai, and not that the FTSE and some of those are emerging markets, but I'm just saying that they are also canaries in the coal mine, and I think they're leading this. If you look at the Korean markets, if you look at any number of like I said, foreign markets, and if you look under the hood at some of the sectors within the U.S., yes, they are canaries in the coal mine. It's exactly what I was saying.
Well, we saw Facebook take that big hit. Netflix as well. Those were the, I guess, the high-tech stocks. Were they the warning sign in the U.S.?
They are part of the process. They're all parts, wheels in the cogs in the wheel, if you will. And the structure, is what I look at, the cyclical structure of all the markets, and absolutely, those are additional warning signs. There is no question. The structure there is very, very important to understand. And, at this point, I'm looking at a chart right now, as you mentioned it, with Facebook, and, it looks to me like the longer term, in my world, 4-year cycle top is probably in place there. I don't have 100% of the evidence there. I'm reluctant to say, as long as this is drawn on, and as many times as the can has managed to be kicked down the road, you're a little reluctant to say until you have all the evidence in hand. But in a normal environment, I would say absolutely. It looks to me like that some of these key stocks like Facebook have probably seen their top.
Tim, a lot of people say when regular folks think you can't lose in a market and they all start jumping in, that's the time to start worrying about it. Is that true?
I think that is true, and it's funny you bring that up. And just this morning, I was speaking to my old friend Peter Elides. I've mentioned Peter before because I have a lot of respect for Peter. He's an analyst that's been doing this he's been an analyst for 50 years, and I spoke with Peter this morning, and he said that he made that very comment. He said that part of his feel for the market and sentiment wise is that he follows some blogs, and he said that he read some of those to me. I asked him if he'd print them so that we would have them and he could talk about them when we do an interview. And he said that the sentiment in those public blogs like that about stocks were just insanely bullish. People talking about how much money they were making and every dip needed to be bought and so on and so forth. And yes, that is absolutely a sign of the times.
Well, I just recall at my birthday party in December a few years ago, everybody was talking about Bitcoin, and they were saying, do you have your Bitcoin, or you must get Bitcoin. I've made a fortune in Bitcoin. And the very next day, it plummeted like a rocket going straight down. And so if you're hearing the same chat about the equity market, that probably is true then.
Well, yeah, but that is, yes, and I don't want to make light of, let's put this in context. You don't want to make light and say, well, when you hear something, it automatically means that something is top, because that's not what you or I are saying, but it is a sign, and it's part of the overall picture, part of the evidence. But to give to that point, to that very point, this is absolutely true. I have a relative who called me right near the top on Bitcoin, and he was interested in doing some stuff with Bitcoin, and I'm like, my radar went off of that. That's a sign of the times, right? And it wasn't a week, and I got another call from my nephew. And, he works offshore, and he was talking to guys offshore, and they were talking about Bitcoin. He calls me, and he starts out, man, I want to buy some Bitcoin. So I download a chart, and I never looked at it before, not followed it, but I found the data. And so I set it up, downloaded, and looked at a chart. Lo and behold, Bitcoin is also one of those canaries in the coal mine. And, it peaked a little bit ahead of the market. It peaked in December. And then it's set up with this very specific structure, a left-translated structure, cyclical structure, which is, you ask me, when's it going to peak? Well, you got to see some of these things happen, and that's part of that evidence that I was talking about that you throw in the scale. And Bitcoin, right as I was getting those calls, was setting up with this structure. And that structure is still in place, and that structure has yielded lower prices. Now, of course, yes, Bitcoin, like everything else, has bounced out of some mid-August lows, but the higher-term structure or longer-term structure, at this point at least, is still broken. And it still looks like that it's probably seen a significant top. And I will add to that I talked about the everything bubble, that all asset classes peaking and turning together and the monumental shifts and all this kind of stuff. Well, that has merit in that, from this perspective as well, in that the structure with Bitcoin is the same, the cyclical structure with Bitcoin is the same as in many of the indexes and averages that I talked about that are leading, the canaries in the coal mine. So how is that? How is that? How is Bitcoin in the automotive sector or whatever related? They're not. But the structure is the same. And so I think those are clear signs of where we are, what's trying to take place, and I stick to my guns that it's a bubble of monumental proportion, and it's taking its time setting up, but it is happening.
Tim, too, we're in the most dangerous time of the year, aren't we? Most major corrections or bursting bubbles happen in either September or October.
Well, September and October, sir, I have not done any statistical work to emphatically say, this is, but yes, on the surface, that does seem to be true. And this time of the year has certainly been, tagged with that, with that, thinking. And I'm not saying it's wrong. I'm just saying I have not put a pencil to it. But yes, I mean, if you look at it, in 2001, the market sold off, and 2002, those were October, those were sell-offs into the fall. And, you look at 2007, that was the market peaked in October and began down. If you look at, going back to 29, if you look at the market peaked in 87, that was in August, that the top occurred, and I think it bottomed in October, if I remember right. And so, yes, we are in that window where major declines have occurred. Again, that doesn't necessarily mean it happens here, but it sure doesn't mean that it won't. And, I guess that does make it somewhat of an iffy time frame we're going into, specifically if we begin to see some things fall in place structurally.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.